All right, today we're going to tackle a huge topic, the journey from feeling broke to building real financial power. We're going to demystify how wealth actually works and lay out a clear, actionable plan to get you there.
It all kicks off with this one simple question posted on a popular online forum. It's so direct, it's something almost everyone has wondered, and it's really the heart of our entire explainer today.
And what's really powerful is the story behind the question. This is the original post from an 18-year-old who's just done with struggling. And you can feel it, right? This isn't about greed. It's about wanting a better life and being able to take care of the people you love. It's a feeling so many of us know all too well.
So here's the game plan. We'll start with the dead simple formula for building wealth. Then we'll get into the engine that actually grows your money, the habits you need to keep it going, and the strategies to protect it. And then at the end, we'll give you your first 5 moves to get the ball rolling.
Okay, so you could read 100 finance books, but almost all of them boil down to one simple, incredibly powerful formula. Seriously, if there's only one thing you remember from all of this, let it be this. The first piece of the puzzle is your income. This is the fuel for everything. It's all about your career, your skills, and finding ways to boost your earning power over your lifetime. Whether that's learning a trade, getting a degree, or starting a side hustle, it all starts here.
In part 2, well, it's just as crucial. You have to control what goes out. This means fighting off what people call lifestyle creep. You know that thing where you get a raise and suddenly you're spending more? Yeah, that. It's about being deliberate with your dollars.
And this brings us to a really important idea, the gap. It's just the space between what you earn and what you spend. A commenter on Reddit put it perfectly. It's like a calorie deficit, but for your finances. This gap, this is the raw material you'll use to build your wealth. It is absolutely everything.
And here it is, the final, critical step that transforms you from a saver into an investor. You have to put that gap to work for you. See, money that's just sitting in a bank account is actually losing its buying power every single day because of inflation. Investing is what makes it grow.
This slide right here really nails the huge mindset shift you have to make. Most people, they get paid, they spend their money, and then they try to save whatever's left over at the end of the month. The wealthy, like Warren Buffett says, they flip that completely. They save and invest first, like it's a bill they have to pay, and then they live on what's left.
Okay, so you've created the gap. What now? How do you actually put it to work? Well, for most of us, it really comes down to 2 unbelievably powerful tools.
First up is compound interest. Albert Einstein supposedly called it the 8th wonder of the world, and for good reason. It's basically a snowball effect for your money. Your money earns interest, and then that interest starts earning its own interest. It just gets bigger and bigger, faster and faster. And the key ingredient that makes it all work? Time. Let me show you a classic example from Investopedia that just makes this so clear. So imagine a twin who starts investing just $100 a month when they're 20. They do this for 45 years. Thanks to the magic of compounding, they end up with over $151,000.
Now check this out. Their twin waits until they're 50 to get started. And to try and catch up, they invest 5 times as much, $500 a month. But because they only have 15 years for that compounding magic to happen, they still end up with less. The lesson here is just undeniable. Starting early beats starting with more money almost every time.
So, where do you actually put your money to get that compounding effect? For a lot of people, the best answer is a simple index fund. Just think of it like this. You're buying a tiny little piece of the whole market, like the 500 biggest companies in the US. You're not trying to be a genius and pick the next Amazon. You're just betting on the American economy to grow over time.
So when you put them side by side, the advantage becomes pretty obvious, right? Trying to pick individual stocks is super risky and takes a ton of homework. Index funds, on the other hand, give you instant diversification, which spreads your risk out. It's a passive, set-it-and-forget-it strategy, and the data consistently shows that over the long haul, they beat the vast majority of professional stock pickers.
Look, having the right tools is great, but that's only half the story. Real, lasting wealth, that's built on a foundation of consistent habits. It's not about some grand gesture you make once. It's about the small, smart things you do every single day.
And this chart, wow, it tells you pretty much everything you need to know. A 2023 Fidelity survey found that most self-made millionaires save at least 20% of their income. Now look at the US average, just 3.6%. That massive difference in saving habits is a huge reason why the wealthy get wealthy.
And you might be wondering, how do they manage to save so much? Well, here's the secret. They actually know where their money is going. A CNBC report found that a whopping 76% of millionaires use a budget, and they don't see it as a restriction. They see it as a tool that gives them control and freedom. It's how they tell their money where to go.
And these other habits, they all just reinforce that simple formula we talked about. They never stop learning about money. They focus on buying assets, things that make them money, instead of liabilities, which cost them money. They build multiple income streams, and they stay far, far away from the trap of high-interest debt like credit cards.
All right, so far we've talked a lot about playing offense, earning more, investing, but you also have to play strong defense. And that means avoiding the big mistakes that can sink you and being really smart about one of your biggest expenses in life, taxes. These right here, these are the wealth killers. Seriously. With credit card interest rates averaging nearly 25%, carrying a balance is like trying to run up a down escalator. It's an impossible fight. Overspending on cars and houses eats up your gap, and not having an emergency fund, that's just asking for a small problem to become a huge disaster.
Now this table breaks down how you can play that tax defense. With a traditional 401k or IRA, you get a tax break today on the money you put in, and you pay taxes later when you take it out in retirement. A Roth account is the opposite. You pay taxes now on the money you contribute, but then all of that growth and every penny you withdraw in retirement is 100% tax-free. So where do you even begin with all this? Right here. Forget the overwhelm. These are 5 concrete actions you can literally start doing today. Set up an automatic transfer for 15 to 20% of your paycheck into an investment account. Make a budget to find your gap. Pick one good finance book and just start reading. Attack any high-interest debt with a vengeance. And open an account and buy a simple, low-cost S&P 500 index fund. Because at the end of the day, this isn't really about just piling up cash, is it? It's about what that money represents. It's freedom. It's security. It's the ability to help the people you care about. It's having options. The journey doesn't start with $1 million. It starts with the first decision. So the real question is, what options are you going to start creating for yourself, beginning right now?